continue to sell for over asking and higher average closing prices despite the slowing market. I'm Tony with Clarkson Santor, and this is our real estate update for the week of Friday, July 26th. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so that you can know how the market is affecting your options as a home seller or buyer. We'll start off by looking at this week's market. There are now 55 homes on the market, which is the same as last week. The average price is about the same, $1,958,000, slightly lower than last week's $1,981,000. One more home went pending this week than last, and again the average asking price is about the same as last week, $1,969,000 this week, $1,981,000 last week. And the same number of homes sold this week as did last week. The significant difference this week is that the average closing price jumped up significantly to $2,294,000, up from the $2,021,000 last week. So now we know how the market performed this week. Next we'll look at the general broader trends and indicators that help us know where the market might be heading. But before we do that, if you do find this information helpful, why don't you hit the subscribe button down below and share this with a friend too. Everyone deserves to be in the know and understand how their market is affecting them. All right, let's take a look at those broader trends and indicators. Starting off with inventory, it stayed the same this week. However, there are fewer homes listed as coming soon, so the future inventory looks like it might be coming down. Homes are still staying on the market longer than they have been for the past several months. About 30% of the homes on the market right now have been on for 30 days or more. But the lack of new inventory should keep the market from really slowing down more than it already has. Turnover. With the inventory remaining the same and the number of pending sales increasing a little bit, it's no surprise to see that the turnover rate also recovered a little bit. Not much. It was 51%, now it's up to 58%. But it is an indication that the market is not trying to slow down even more currently. We are still in a market where buyers have more confidence and ability to take their time and really consider each home before committing to a purchase. Despite the market slowing down, the over-under number has remained comfortably in the over range, and it increased a little bit this week. Homes are now closing for an average of about $50,000 over the asking price. That is 2.5% over the average asking price. We have been seeing this number come down over the past month or so, couple of months, which is to be expected in a softening market. But the past couple of weeks has seen that number start to creep back up again. This could be an indication that sellers are adjusting quickly to the new market and pricing their homes more competitively. Along with the over-under number improving, the average sales price has also seen a bump this week. It is back up above $2 million for the 30-day rolling average, which is almost 10% more than the average price we saw at about the same time last year, right before it started to tick back up there. With the market slowing down, it is encouraging to see that the prices are not dropping drastically. They did come down, but now they're kind of leveling off. With the market, the fact that the average is creeping back up probably just means that the more higher priced homes that were taking longer to sell than the more affordable homes are now finally selling and closing. The triple Q dropped again this week by about 4%, which could play a role in reducing buyers' affordability, especially for the buyers coming from the South Bay and Silicon Valley, who have a lot of their wealth tied up in the technology sector that the triple Q fund is tied to. If it continues to drop over the next few weeks, that will be a big concern. But as it stands right now, we're still well above, this is the 3-month, but we're even higher than the year to date. We're about 17 to 20% higher than we were at the beginning of the year. Interest rates remained in the 6.8 range this week, moving about 1 basis point, so not a significant change there. As inflation continues, there is no incentive for the Fed to reduce rates, even with the election looming. So I think we're going to be seeing these rates through the end of the year, at least. Even with the market stalling out over the past few weeks, we haven't seen a significant drop in overall value. The fact that we are well into a month's time of slower market movement, and we are seeing closing prices and over-under numbers start to creep back up, is a little surprising. Usually when you see a prolonged period of slower turnover, you would expect to see those lagging indicators start to drop off to match the slower market trend. What this tells me is that even with a slower market, there is still plenty of interest in the San Ramon housing market. We live in a safe city with highly rated infrastructure known for its safety and good schools. As long as a home is priced well and marketed well, it will still be able to find interested home buyers to make offers. Thanks for joining me this week for the update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the like button and subscribe down below so that you can stay informed on how the market continues to shape up this summer. And if you do have any questions about how you can navigate the stressful, confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. I hope you have a safe weekend, and I'll see you next week with a new update.